Hey, this is June from Turning Point Life Investment, and this video is for the week ending in May 16, 2009. So we ended another options month. Hope you guys had a great trading month. Let's take a look at the market using SPY, starting with a 3-year weekly view. So we finally got our little consolidation week this week. We've been harping at the market, just basically saying that, we're due for some kind of correction, we're due for some kind of pullback, and we managed to do that this week. Let's jump straight into a daily view. As you can see, Friday we managed to pull back towards the 20-day moving average. So as expected, you can see how prices came very close to reaching this previous resistance level here, right around the 95 area. Okay, so the market sometimes always likes to trick us, right? It doesn't always behave or perform the way we like it, just because we have resistance right overhead. Not to mention that there is a 200-day moving average right around the same price level. It doesn't mean that it will always tag it. It doesn't always work according to how we like it. So, we always have to prepare and see worst case scenario. But nonetheless, we did manage to get this pullback this week as we anticipated. Notice how we were getting a little bit stretched out from the moving averages. Okay, as you can see here. Not to mention that we are a bit overbought in the stochastic, and the MACD was showing divergence. So what the market is trying to do right now is trying to alleviate itself out of overbought and also try to work out this divergence by correcting itself. The only question is, how long will this correction take and how deep will it be? One very interesting thing here that I want to point out is that from beginning of January all the way to pretty much beginning of March, we had this huge decline that took roughly about 2 months. And once again, you notice how it took approximately the same amount of time for us to reach back to this previous price level. So you can kind of see how the market has some kind of symmetry going on in terms of price and in terms of time. So we more or less fulfill that price and time symmetry. Now, as far as where the market will go from here, honestly, it's kind of hard to say because, will the bulls come in? Let me get rid of these blocks here. Will the bulls come in and use this pullback as another entry to push the market higher, or is the uptrend damaged and we're ready to see a deeper sell-off? That we really have to wait and see because, if the 20-day moving averages break, then we can definitely head back towards this 50-day moving average. However, if 93 breaks, we can probably retest this 95 price level as well as that 200-day moving average, which is right ahead. So really, the best thing we can do is just watch those price levels. We just have to anticipate for the best and also anticipate for the worst. Okay, let me go into an hourly view. Now, notice what's been happening. We have this 20-day moving average has been trading above this 50-hour moving average. But notice that within this week, we have a shift towards a downside momentum, at least on a short-term basis, right? So from a short-term perspective, this current uptrend is damaged. Okay, so it's no longer a trending upwards anymore. So the only question is, will this 88 price level hold that we managed to more or less retest? Okay, but you can even see back here, there's quite a few gaps that the market left, and as you know, the market likes to refill or to fill in those gaps. So I would say somewhere around this 86 level, somewhere around there would be a nice target if 88 breaks. Okay, and as far as the upside, we have a couple of gaps here as well, right around the 90, 91 area, and as well as the 92, 93 area, all right, 92 and a half, I should say. So, this is why trading in this range, it's a little more difficult because, there's some pretty strong resistance up ahead and pretty strong support down below. So, like I said, just watch those price levels. As far as my best guess, what the market will do, I think we'll probably head a little bit lower next week. Only because, if we look at the overall trend, we've been up more or less for a good solid 2 months, and a week's worth of correction isn't really going to fulfill that long-needed correction that the market's due for. So, I would expect a little more breakdown, a deeper breakdown before we can head higher from that point on. So next week will probably be a good chance that it's going to be a down week. Okay, let me just jump into the VIX real fast. Just take a look at what the market sentiment and volatility is going to show us. So we're starting to come out of oversold. We're just a little bit oversold with the VIX, and notice how we're kind of coming out oversold. And also there's a bit of divergence going on with the MACD. Notice how each subsequent lower peak is much weaker than the previous one, even though the VIX continues to head lower. So, it's showing some bullish divergence with the VIX, indicating that there's potentially a bounce higher next week, which leads me to believe that next week could be a down week based on just the VIX alone. So overall, going back to the market, just be cautious. If you have longs, if you still have stock, if you're still holding to some bullish positions, definitely put your stops a little bit tighter. It's not as bullish as it once were last month or 2 months ago. So, you want to protect whatever profit you're already making. And as far as shorting, be a little cautious in shorting as well. Not until we break certain support levels, then maybe you can add some shorts to it. But overall, just be a little cautious in the market next week.